join कर लेंगे. Okay, so we started with analysis of top line, in which we discussed a 5-year CAGR, 3-year CAGR, 1-year sales growth, and then we talked about finding out or investigating all the reasons for these dispersions with respect to past and dispersions or variances against the competitors or the industry. Then we moved on to understanding, diving deeper into the sales growth and analyzing the year-over-year trend, and finding out again the reasons for yearly change or annual change or against the competitors or against the industry. And then common size income statement, in which we discussed that common size income statement should be analyzed with respect to past and also with respect to other competitors or with respect to the industry. Now moving on to earnings growth. So once you have analyzed everything, that what is causing the change in each of these items, then you move on to earnings growth. Within a company's income statement, earnings are more important than sales, because earnings eventually tells you what is the money that you are making or what is the actually return that you are making. So earnings are of more important than sales. If sales are growing at a high rate but earnings are not growing, then there seems to be a problem with the company, or there will be a problem with the company. So with respect to profits or earnings, there are three major types of profits that we look at: gross profit, operating profit, and net income. Within this, gross profit is the most important because it relates directly to the production. Agar gross profit margin आपका decrease होगा, so that would flow to the whole income statement and that will impact all the line items. Operating income is also important but not as important as gross profit, because operating income is controllable. क्योंकि ये fixed expenses होते हैं, you can eventually control it or you can eventually reduce it. But gross profit is more important than operating profit. And then net income. Net income or operating income के बीच में there are some expenses which are usually can be unusual or can be not related, might not be related to the core business or might not be related to core operations, like interest expense, taxes, unusual items, or any such other expenses. So within these, the most important would be your gross profit, and then your operating profit, and then your net income. Again, before you go into analyzing earnings, first thing to do is to find out the trends. And how do you find out trends? You find out trends by calculating 5-year growth, 3-year growth, and 1-year growth. So again, you will do the same exercise that you did for sales. So can you guys just quickly calculate the 5-year operating income CAGR? Okay, so if you look into it, operating income 5-year growth was 7.4%, 3-year growth was 6.5%. What is the reason for this growth? Primary reason क्या है growth का for operating income 5-year and 3-year? Yes, so primarily sales are driving it. So there can be two items that can drive your profit. Either it can be cost, expenses, change in expenses, cost or anything, or it can be your sales. So if I look into it, जब मैंने sales के CAGRs निकाले थे, तो sales के CAGRs भी were broadly consistent with operating income CAGR. Sales में भी इसी तरह से था 7.5% or something like that, and 3-year was also 6.5% approximately. So if I look into it, my operating income is aligned with the sales growth. That means कि मेरी overall जो profitability है, that has not changed, and what is driving my operating income is primarily sales. कि मैं अपनी profitability improve करके या expenses cut करके profit drive नहीं कर रहा हूँ, operating income drive नहीं कर रहा हूँ. Operating income is being driven by sales. क्योंकि मेरी sales बढ़ रही है, इस वजह से operating income primarily बढ़ रही है. So again, first key check or the initial check is to find out कि क्या sales के growth top line growth drive कर रही है profit, या फिर cost cutting या फिर efficiencies drive कर रही है profit. So if growth is driving the profit, that is sustainable. क्योंकि that means जब तक कंपनी ग्रो होती रहेगी, आपके प्रॉफिट भी बढ़ते रहेंगे. बट अगर ग्रोथ प्रॉफिटेबिलिटी ड्राइव नहीं कर रही है, ग्रोथ बहुत लो है, एंड प्रॉफिट्स आर बीइंग ड्रिवन बाय कॉस्ट कटिंग और बाय रिड्यूसिंग कॉस्ट और लेइंग ऑफ वर्कर्स और दैट, देन दैट इज नॉट सस्टेनेबल. सो अगेन, फाइंडिंग रीजंस इज important. Second important thing to look into it is that operating income decreased from 7.4% to 6.5% in 3 years. But So that is a significant decline. Operating income declined and sales also declined. But if I look into net income actually increased. So what can be the reason for increase in net income? Interest expense has declined, so that has led to increase in net income. So again, net income सिर्फ अगर increase हो रही है, if you are, let's say overall, if you look at only at net income, then it will look like the company is in a good shape, doing good. Its net income has increased from 5-year to 3-year CAGR, and then further on in 1 year. But then again, this net income increase has been driven by interest expense, and that is obviously not sustainable. That is not the core business of the company. So whenever you are analyzing the change in profitability or any increase, decrease in profitability or increase or decrease in sales, key point to note is that whether core business activities are driving that change or is it due to some extra activities or interest activities or capital market activities. So if core business activities are not driving the change, then that is not sustainable. And if core business activities are driving the change, then that is sustainable in long term. So again, this is just a simple basic start to income analysis or earnings analysis. Secondly, what you need to do is you need to compare your earnings growth against the sales growth. So generally your earnings growth should be consistent with sales growth, assuming that there is no significant change in profitability. So if I look into 5-year period or 3-year period, 5-year period, it is broadly consistent. That is, my earnings growth and sales growth over 5-year has broadly been consistent. But in 3-year, earnings growth is higher, and in 1 year, earnings growth is even higher. So what can be the possible reasons? Possible reasons can be that if अगर मैं 5 साल में देख रहा हूँ तो earnings growth और sales growth aligned है, but अगर मैं 3 साल में या 1 साल में देख रहा हूँ तो there is a significant mismatch. So that means that probably or maybe in initial years net income कम रही होगी और sales ज़्यादा रही होंगी. Maybe company had adopted certain policies that had resulted in operating expenses or other expenses being higher. So अगर initial years में, let's say this is 0 to 5, अगर initial years में expense was higher or company adopted some aggressive or conservative, some aggressive expense recognition strategies, then net income will be lower. Then in later years, or let's say for an example, let's say that the company used accelerated depreciation method, due to which in initial years expense was higher, or the company borrowed money for investment, due to which interest expense was higher. In later years, this reversed and expense decreased and income increased. So it means that last 1 year में या 3 year में I see an increase in income or profitability, but that increase in profitability is actually not very sustainable. Why? क्योंकि it is kind of a reversal from initial years. So पहले profitability decline हुई, उसके बाद profitability increase हुई. So I cannot expect this trend to keep going up, because I know that over period it first declined and then it increased. So there is a possibility it may decline again. So over a long period of time or over 5 years, the company has maintained a specific profitability. So again, when you are analyzing change in profitability, you should know whether that change will continue in future, or for how many years will it continue, or will that change be eventually reversed or reduced. So that is again only possible if you look into the notes or supplementary information and you find out the or investigate the reasons from there. So key points to answer or key questions to answer at this part would be: what are the reasons for increasing dispersion in earnings and sales, and is this high earnings growth sustainable or not? Will the company be able to sustain this 17% growth, or will it again fall to 7% from 17%? And that again would only be possible if you know what is driving the earnings or what is leading to this actual change. Any confusion so far till this point of